The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Good morning, Seppe and Dimitri, and welcome to this episode of the Banking Scene Director's Cut, where we're going to be talking about something that is extremely relevant to our audience today, and that is responsible AI. Everybody, the topic of AI isn't going away anytime soon. Lots of people have been doing lots of things, and one of the areas that they have been struggling with is governance, because everybody's got governance. Nobody wants more governance. But my first question to you, gentlemen, is why does traditional governance fall short when applied to AI in financial services? Why can't they just use their existing governance systems? Who wants to go first?
Yeah, I'll maybe jump straight into it. First, thanks for having us. I think the big difference is that AI is based on data, and we're deriving our decisions from that, which is the big difference from traditionally where it was more deterministic rules that were coded into IT systems that were used to automate and make decisions. And it's because this change of how we build our software systems based on data is, I think, the big difference that makes that we need to extend the governance processes that already exist. Because I really do think a lot of the governance practices that are already in place are still relevant, but maybe not sufficient, because the decisions based on data might be non-deterministic. It might lead to things like bias or maybe even misuse if we don't really understand this new technology sufficiently. And then with that new paradigm, I think we also see a few drivers that make it extremely more relevant today. Because AI in itself is not that new. Banks have been doing it for maybe 10, 15, maybe 20 years in like a predictive use case scenario, maybe in some areas like fraud or risk management. But it was always like very specific use cases with highly skilled people. And then now with the advent of generative AI, banks are starting to experiment with agents, and just the sheer accessibility of these new technologies makes that we really need to extend the governance processes that are already in place.
So what sort of unique challenges, strategic challenges, do you think that the financial institutions face when implementing responsible AI? Is this something unique, or is this just a business as usual to them?
I think a couple of angles to this question. I think banks are generally quite well experienced with risk management and governance and regulatory compliance, which I think are key building blocks to implementing AI governance as well. And that makes it both a strength and a weakness at the same time for these institutions. First of all, they are quite comfortable with all of these elements, and they can bring those skills and the right skill sets in the different teams and organization or teams that they have within their organization. But it also creates a challenge because they are not starting from a clean slate. They already have a lot of governance processes, usually diverse across the organization in quite complex structures. And the only way to make AI governance efficient and not feel as like an additional burden that is holding us back from using this incredible technology is you need to integrate it in these existing processes. And that therefore also takes a lot of time for the people to, first of all, understand what is going on in the bank as a whole on risk management, regulatory compliance, and IT governance processes, and then add the elements that are needed specifically for AI. So it's, I think, a bit about the strength and a weakness at the same time.
So you had mentioned earlier on some of the principles like fairness, transparency, explainability, because you had brought up bias as well. Bias, we know that a lot of historical data probably contains inherent bias in it, in the way that humans have made decisions in the past, and maybe the decisions or the rules around ethics and bias weren't really codified. So which principles like fairness, transparency, or explainability should banks be prioritizing in their AI initiatives, and why?
Yep. I think the core principles are the ones that keep coming back. You mentioned them. It's transparency, human rights, fairness, privacy, things like robustness and security. And I think it all tails back to the core position that a bank needs to pay and it needs to be a trusted organization within society. Yeah? The clients of the bank need to be able to trust that these banks are managing the data and the money and all of the services that they're providing in a responsible manner. So all of these principles should in fact apply. But making these principles actionable in the real world context is often the challenge. And I feel there is like a little bit of two ways of approaching this. Some principles should always be present. For example, transparency should always be there. Even whether or not AI is present, people should understand how their data is used, where it's processed, who's it shared with. So that should basically always be present, and is almost like a quality management mindset. It should be there. I think other elements are less straightforward to always have apply. I think the good counterexample is explainability. We don't always need to completely understand how these AI systems work for them to still bring value and make a benefit to the bank, society, and the customers. And in some ways, it's also almost like an impossible challenge. If you really want to understand how Gen AI models work today, there is not really a solution that is accepted in the whole organization. So that creates some challenges. But as general principles, these elements can definitely be guiding. Certain ones should always apply. Things should be fair, things should be transparent, and then the others might be more in a risk management capacity, making the balance between what is feasible and what is needed. Yeah.
Yeah, if I may add something, indeed. So I think part of the choice of the bank will be driven by the regulation, of course, that exists, but there is also the risk appetite of the bank itself that will drive the decision that you make on which or where to give your priority in this perspective.
And so you mentioned the bank's risk appetite. How can financial institutions build a robust AI risk management framework that balances innovation and compliance? Because risk appetites in a bank are generally quite risk averse. AI is something new, and Seppe explained there that maybe not always understandable to the fullest, although we can still get benefits from them. So how do they balance risk management and innovation and compliance?
Yeah,
Have you got examples of what works well, or maybe even, without naming names, what hasn't worked well in the past?
Yeah, I think what is really needed is make these things explicit. Because concepts like we need to innovate or we need to manage risk are inherently quite abstract. And if you bring that to the people working on AI systems day in, day out, it's not really tangible enough. They can't really make the right decisions. So the objective should really be to make this risk management or responsible AI tangible and actionable. And then we come back to the governance processes that are already in place. There is already a lot in place. Every bank has their risk scales that guide their risk appetite and who is responsible for taking risk management or risk acceptance decisions depending on the risk levels that we're accepting. So these need to be integrated in the AI risk management or the AI governance practices. But you need to find the AI specific link because most of these risk management practices that exist in the bank will also not help the data scientist. So you need to make that connection. And what we usually do is you need to look outside in research for best practices from AI labs and curate your set of AI risks that are worth looking at. We typically look at things like accuracy or hallucination in the sense of Gen AI, things like fairness, biases, but also harmful output. We even look at things like misuse of AI systems. Maybe someone just doesn't understand it's a chatbot made for a specific purpose, and then by mistakes use it in a way that wasn't intended for. There are aspects to like legal and IT security that are usually quite well covered, and even the environmental aspect is something that is getting more and more traction. So you have these set of specific AI risks that you want to look at, and you need to map these to the risk scales. Like how important is it to look at certain of these aspects for a specific use case? And I've seen that once you get to that AI specific level and you have identified like, okay, these are maybe the 3 to 5 key areas for a use case to look at, then you also get the buy-in from the technical side working on these AI systems, and they will come up with solutions. If you ask a data scientist to make sure you're the propensity to buy model in marketing, make sure that it's fair, then they're like, okay, sure, but what do you want me to do? But if you make it specific and you say like, okay, we want to make sure that men and women are treated equally in this model, then they start to understand, I can do this and that test, and I can maybe change my model in a certain way. And then you actually get actionable risk management on the AI use case.
And that actually came out of early research that we had done last year around the technical teams aren't the ones that should be burdened with the decisions of what is fair, what is bias, what is not, because as you said very rightly, they're very abstract things. And we've seen the rise of a number of banks implementing dedicated AI ethics boards. In one case, one of our speakers at one of our conferences had said that the bank that he was working with realized that they had never considered the ethics explicitly, considered the ethics of the decisions that humans had been making historically. And it was only in implementing AI that the technical teams highlighted saying, what is the correct decision in this case? And that shouldn't be for the technical team to decide. That needs to be pushed back up to the business. So who should own the responsibility for AI governance in a bank? Should it be the business? Should it be tech? Should it be compliance? A dedicated ethics board? And if it is an ethics board, who should be on the ethics board? Who should be a part of it?
Yeah, I think if we look at responsibility, I would always like to see 3 broad categories of people involved. Obviously, you need the technical people because someone, in the context of banking, someone needs to build it. In most of the cases, you have the same thing for procuring AI systems, but you need some technical expertise. Secondly, you also need the business. They need to make decisions on how much do we want to invest in this use case, how much value will it need to create, and where are we going to spend our time. And then there is this broad set of experts or control functions. It could be specific roles on ethics, but then also like people from security, privacy, regulatory should be there. And these 3 groups all play their own role in responsible AI. And then you could make an argument that you might need to have someone in the middle as a new role to really bridge these groups. I think the risk management responsibility should, in the end, fall on the business, because they're the ones that also have the possibility to make decisions on how much are we going to invest in risk management. And if you can't make that choice on how are we going to manage risk, or are we going to accept it, then, well, you're the one in control of the risk. Obviously, they need to be supported by the technical team that can highlight possibilities of risk management. We took the example of fairness. We can detect it in multiple ways. We can manage it in multiple ways. And they need to highlight the technical feasibility, the cost, and the potential impact. Likewise, they should also be supported by expert roles like privacy, legal, and security teams, to give them a little bit guidance on where can we go with this use case and what are certain requirements that we need to fulfill. So I think these three groups should always be present. And then the second question is, should we escalate this to a certain board? And I think that really depends on the risk, in this broader sense, the risk category of the use case. If it's something that is low risk with low legal requirements, it doesn't make sense to push this to a C-level board, because banks will be developing hundreds, maybe in the thousands in the near future of AI use cases. The sheer volume would just not be possible to have these in-depth discussions at that high level. But I do agree that if the risks are high, and the clear example is high-risk use cases under the AI Act, should probably go to a higher level, to a board with all of these three categories represented, to make the decisions of, do we actually want to build this type of use case, or do we actually want to deploy it in a later stage?
Dimitri, in your experience, what does it take to operationalize this responsible AI across a large-scale financial organization?
I think it's probably the biggest challenge there, is that you need to connect a lot of people. Also, people that are not used maybe or to work with the subject, with AI, that have a lot of other concerns at their mind and the bank. So to operationalize it, it's not so easy. I think you need to start with a clear framework. And you need to have clear roles and responsibilities defined to make sure that the right people are connected with each other.
Mm-hmm.
Yeah, I can only build on that. I think creating clear ownership of a dedicated team that can really push this forward is very important. And then the second one is almost education, because we have these three groups I talked about, all with their own viewpoint, all with their own expertise, but also with their own blind spots. And I think we need to educate it. For example, most data scientists are not really familiar with risk management and how we do that. And then risk or legal people are not always very familiar to what is AI, what is the difference between predictive or classical machine learning, Gen AI or agentic AI. So we really need to fill in these gaps, because I think that's the core problem. And it's very different from once these people understand, then they are usually very willing to support the responsible AI cause and contribute to that story. But the challenge is usually they don't always have the skill set to contribute in a meaningful way.
So education is important to build that culture, really, of responsible AI across all of the groups, to be able to get them to understand what this new thing is. So what sort of blockers have you come across in organizations trying to do this, and how have you helped them overcome these blockers and maybe put in some guardrails and help them to adopt this new technology?
Yeah, I think one of the clear blockers that I've heard is a very clear no from the legal team on, like, we don't have the skill set or the capacity to review every of these use cases on whether or not your AI Act classification is the right one. So it comes back to making sure that the skill set and the capacity is there to actually spend time on that. So that's definitely one thing. And then I think the second one is, and I think you highlighted in the beginning, people in the beginning of their responsible AI journey, they still see it as a burden and on top of the AI governance. And there we really need to see or look for the efficiency gains. And there are multiple ways that we can do that. Usually one thing that we do is bring this, the shift left, if we want one of those terms, of risk management early on. Have a good view on what are the key attention points for this use case so that we can plan ahead and prevent the situation where the IT manager is like, okay, I want to deploy this model in production next week. Let's check with legal, security, and all of the other stakeholders if it's actually fine. And you will usually find out it's not fine. You will have to have some work. And then you run into trouble. So that's really what we want to avoid by making sure we look at risks early on. And the second part is try to find efficiencies across use cases. The best example here is still in the context of marketing and propensity to buy models. It's usually like 50 to 100 times models that are very, very similar. Doesn't make sense to manage all of them separately. You can like aggregate these in like a type of AI systems like propensity to buy models, where you do a risk assessment once and then gain efficiencies to manage these as a whole instead of completely separate. But that requires that you have good processes and good documentation to also aggregate and extrapolate this document.
I think the key thing there in summary is involve all the stakeholders early and take them on in the journey. Don't just suddenly throw it to them at the end. So to bring this to a close, I'm looking for a bit of advice from each of you. If you had to focus on just one area to get right in implementing responsible AI over the next 12 months, what would it be and why? What's the most important thing for them to get right?
Yeah, I would say probably start with this early on risk assessment. I know there are legal requirements to have a full overview of your use cases, but I think what I realize is the people in the organization usually know which are the most important use cases. They have a feeling to it. And for those, do a risk assessment, a broad risk assessment involving the different stakeholders early on. And setting up that process is, I think, the main focus, because it will allow you to be efficient, because you already you make a selection on these are going to be the impactful use cases that we want to do. And by bringing on everyone early on, you also make sure that it's fully managed and managed in time to avoid blockers. So that would really be my first focus. It's to start in the beginning of your AI development process to make sure you have a good view of what are we building, what do we need to get out of it, and how do we manage all of the risks that exist in there. From there, you can then expand. How do you follow that whole risk management process throughout the AI lifecycle? And also, how can you extend it to make sure that you don't none of the AI use cases fall in between the cracks and that you manage everything. So that would be my first focus.
Dimitri, have you got anything to add to that?
I completely agree with Seppe, of course. I would like to emphasize again that I think alignment is really key, because there are so many different functions involved. You need to align on what Seppe mentions, on the risks, how you define them, what your appetite is, what are the most important use cases to focus on, and so on. Also, creating the awareness around it is very important and key to get it right after 6 months or more.
And Seppe, you actually published a great summary PDF that has got your 3-step approach to focus your responsible AI efforts. And I will get the official link from you, because I've got the PDF, but I'll get the official link from you and put it in the show notes and in the blog that follows, so that people can download that as a cheat sheet, really, for a place to get started. Thank you very much, both of you, for coming on the show, and we look forward to catching up in a couple of months' time to see how it's going and how the progress of Gen AI in financial services is going.
Thanks a lot.
Thank you very much.
Andrew.
Cheers.